Hey everybody, good morning. How's it going? How's it going? How's it going? We have a big day today, if you didn't know. Today is FOMC day, 2 o'clock. We've got to be careful if you're day trading or any kind of trading, really. Got to be careful because the market could do crazy stuff, even though it's kind of like a foregone conclusion that we're just going to hold rates steady. I mean, it's like 99% chance on the betting markets. But when Powell opens his mouth at 2:30, things can happen. So, welcome back to the show, everybody. My magnificent monsters of the markets. This is Morning Monster, the only show that I know of that fuels your financial genius with a questionable life choice of what you drink. I'm your host. Today, we're strapping in for the main event, as I see it. Might be a triple shot of espresso followed by a bungee jump. Earnings for big tech, led by Tesla. We also have Microsoft and Meta throwing down too. Apple coming in tomorrow. That's probably the bigger influence over the day than FOMC. So that's right. After the bell today, the great and powerful wizard of Elon will descend from his digital throne in Starship, Texas, or whatever, and tell us whether Tesla has been printing money or just printing memes. And let me tell you, the drama leading up to this one has been juicier than a soap opera written by a bot that's been fed nothing but financial news and Shakespeare. It's interesting. So what's the story this time? Well, classic case. David and Goliath yet again. If Goliath was a car company that also wanted to put chips in your brains and go to Mars, and David was, well, a slightly smaller but more efficient Chinese car company named BYD. Now, for the first time, Tesla has been dethroned as the world's largest EV maker. That's got to sting a little bit more than a Cybertruck door panel in the winter. Yikes. Especially if you licked it. And it's not just about losing the crown. Tesla's brand value took a nosedive last year, dropping a staggering 36%. Elon maybe should have stayed out of politics. Apparently, when the CEO spends more time in a political cage match and posting crap on X than actually getting products made, it can have a significant impact on consumers' sentiment. Who would have guessed that? Our data shows that the average American's willingness to recommend a Tesla to a friend went from a glowing 8.2 out of 10 to a dismal 4 out of 10. And that's a tarnish on the reputation. It seems that funding secured has been replaced by trying to get brand value unsecured, or resecured. I don't know. Now the Wall Street wizards are predicting earnings should be about 45 cents a share, which is a 40% drop from last year's numbers this time. Deliveries are down for the second year in a row. And if you haven't noticed, consumers are a little bit stressed here too. Revenue is expected to shrink. Kind of a grim picture, but like a black and white movie where the hero is tied up to the railroad tracks and the train is coming down with recession printed all over it. We'll see what happens. But here's where the story takes a turn. And we already knew all that stuff. Tesla, this is Tesla, right? We're talking about Tesla. The company that defies gravity, defies logic, and sometimes defies basic accounting principles. Let's kind of look at the history of this thing, shall we? I built this spreadsheet, and I'll show more about that in a minute. It's a beautiful tapestry of chaos woven over the last 10 years of Tesla earnings. Over the last 40 earnings reports, think about it, we get 4 a year, 10 years, that's 40 earnings reports. Tesla has had a habit of making some rather outsized moves. The average pop after a good report is a face-melting 50% rip higher. The average drop after a bad one is a more modest, but still painful 14% drop. But here's the kicker. The last time that Tesla reported earnings, back in October, it beat expectations, and the stock was up an insane amount over the next month. It's not really a move, that's a space launch. And the patterns are fascinating. When the stock is already beaten down and at the bottom of its trend, the average post-earnings move is about a 25% gain. When it's flying high at the top of its trend, the average move is a slight loss. I mean, kind of makes sense. It's almost like the market is a moody teenager rewarding humility and punishing arrogance. And right now, the stock has been down a little bit over the last year. We're sitting just below the highs, but we took a big dip last year. We're down off of the highs. We're on a pullback. And, you know, you could argue maybe the stock has been sufficiently humbled. The rest of NASDAQ has been on a rip. This is not at all-time highs, although it's close. So what's the opportunity here? How do you play it? How do you savvy monsters of the market play this? Well, you could just buy the stock and pray that Elon says something good. But usually when he opens his mouth, the stock drops. But that's kind of boring. We're here for thrills, right? Let's talk about some options. The options market's pricing in about a 5% move either direction. 5% pop, 5% drop. That's smart money trying to put a fence around the chaos, I guess you might say. A 5% move would take the stock from around 430-ish up to 460-ish on the high side, or down to 410-ish on the low side. You can play that with a simple straddle, buying both a call and a put. I mean, might work for you. If the stock makes a big move in either direction, you could win. It's a bet on volatility itself. If there's one thing that Tesla guarantees, in the past, it's been volatility. But let's get a little more creative here. Remember those notes along the way? Things I talked about that, we've seen? I've got some notes on the spreadsheet. I'll show you here in a minute. We've gone higher and then done a big drop. That happens quite often. The stock pops on initial news, and then as the market digests the full report, it comes back down to earth. So a more sophisticated play could be to buy a call for the initial pop. Then, if you get that pop, sell that call, buy a put, and ride the wave back down. It's kind of like surfing a tsunami. Dangerous, but the rewards might be epic. So, long-term story. Is Tesla doomed to be the MySpace of the EV world, or are the robots and the new tech and the self-driving all going to shape the vision of the next paradigm shift of the company? I mean, I wouldn't count them out. They have a shining beacon out there that hardly anybody talks about. It's energy business. That division has been growing at a blistering 49% year over year. It's like finding a pristine, untouched monster laying in the back of the fridge after a long night. It's not the main course, but it's a dang good appetizer. And then there's the narrative. Elon is a master storyteller. Whether you believe it or not, he weaves a narrative of a beautiful future covered in rainbows and unicorns. He's going to get on that call tomorrow, and he's going to paint maybe a beautiful picture of robotaxis, humanoid robots, probably a new, maybe even more angular car than we've got now. He'll distract us from the boring numbers with a vision of a glorious automated future. And you know what? Some people are going to buy it because it's a better story than we sold less cars because the government quit subsidizing them, and it's not looking so hot for the next year. So the top question from shareholders for this call, probably isn't going to be about margins and deliveries. It's, can we get a piece of that SpaceX IPO guaranteed for shareholders? Now that could be the big launch there. If Elon actually says, yeah, I think I'll offer up Tesla, long-term Tesla shareholders, a piece of the SpaceX IPO, or maybe even any Tesla shareholders, a piece of the SpaceX IPO first, that could be rocket fuel for Tesla to be at 700 in a blink. That's the black swan out there. You know, the faithful are still faithful. They're just not investing in a car company anymore. This is investing in a cult of personality, sci-fi dreams. And so here's my take. The numbers, at least as far as car deliveries go, pretty bad. The brand, got tarnished last year. Competition is fierce. Right now, Trump keeping Chinese EVs out of the U.S. market, but that's not the case on the rest of the world. But normal rules don't apply here. I'm kind of expecting a wild ride. Elon probably going to pull a rabbit out of a Cybertruck, or maybe pull a Cybertruck out of a ditch. I don't know. I'm expecting the stock to make a move. And if it goes up, it's probably going to be a big move. Down, the average is kind of a smaller move. So get your popcorn ready. Set your stop losses if you're long. And for the love of all it's holy, don't bet the farm. This is a high stakes game. Only monsters survive here. Smart monsters, that is. So let's dive into some charts. Let's talk about the spreadsheet I have and see what else we have potentially to make some money today. What do you say? What do you say? What do you say? I guess before we get into all that, though, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument. If you want somebody to tell you what to do, you can hire and consult them, but you should be careful if you're trading, buying, or selling any stock, option, bond, forex, futures, cryptos, treasuries. If you trade any of those financial instruments, you may lose money. Be careful out there. And so the problem with LiDAR is sensor fusion, David. I don't think LiDAR really matters that much. Heck, they've already had several Teslas drive cross country without ever touching the controls since the new version 14. So I'm not sure that LiDAR is necessary. So Kimberly, my favorite subscriber in the house, and I'm going to drive it to Texas. I'm going to drive to Florida here in 2 weeks, drive my truck, and the truck's going to drive me to Florida is the plan. I don't plan to touch the controls from basically my driveway to the hotel. So we'll see what happens. Should be interesting. It's going to be like about a 10 to 11 hour trip with charging stops. That's what the truck estimates. So got pretty darn close on that one. Missed it I drew the line right there for the peg, and we were about 55 cents, 52. What was that? What was the close? Close was 69.55. So 55 cents off of 695.55. Drew that line at 695. Before we get too far down the rabbit hole, let's just go over to Tesla. TSLA. Jump in here, take a look at what we got on the daily charts. I'd say if we drop, which looks like we might do, roadmap line 406 area, probably be where we're heading. Now, for Tesla, they've got new options starting next week, 3 days a week. But for this one, 2 days left on the till here, sitting at 431, 432. So right here, take that, sell it, take that, sell it. $25 move is what we're pricing in. So that would be down to, golly, that's down to 407. And so it's pricing in a pretty spicy move here, up to 55. It's kind of the move we're pricing in here. So we'll go outside that range. Now, if you had no idea, this is for the next 2 days. Encompasses the earnings coming out today. Little E right there. So what you do to calculate how much the market is pricing in for a move, you sell both sides. You sell a straddle. Now, all that does is tell you basically what the market makers are pricing in. My buddy Jack, when we do a Market Masters show at 11:30, links in the description if you want to come hang out with us. He was a market maker, and he talks about market makers price this straddle right here so that they are unlikely to lose money. Unlikely to lose money. We'll go look at the 407, the likelihood that that put is in the money, 22%. We'll go up here, 455, we'll look at the call, 22%. So that's the kind of move that's being priced into the market right now. And I bet you I closed the spreadsheet just a second ago when I was trying to open the monologue. Yep, that was brilliant. I was in a mad rush to get everything open. Pop open this and zoom her up, Buttercup. Pull this over. So here's our averages right here. We have a average, like the average move down on earnings for the last 40 quarters, 14.5%. Percent of the time that happens, 68% of the time we drop. Now, that's the average move. 68% of the time it happens. Average days to drop usually takes 6 days to drop. So if you were playing a put, you played out 2 days, you might run out of time. And the average move up dwarfs the average move down with 39.89% right there. And the all-in reaction is actually a 2.8% move higher because the move ups are so big, even though they happen like 31% of the time. Interesting. This, was closer. This was slightly above 70, but the last earnings was a positive move, even though small, and tilted the odds just a little bit. So 40 is a statistical population, but is Tesla of today the same as Tesla of 10 years ago? Probably not. And especially since it's now $1 trillion company, makes it interesting at best. Now, one thing you could do, if you're expecting a pop, you could roll in here, buy that, sell that, spend $1.25, and you could easily double your money right here if we pop. End up here. Now, if you, on the flip side, if you expected a drop, you would buy the higher put, sell the lower put, cost you $1.30, maybe $1.20. If you could get into these, if you were aggressive and got into these, say, down closer to $1, if you could get it closer to $1.15 and you do that on both sides, it could be a smarter way to play a straddle. Now, the max profit here is $2.50. And it's very unlikely that Tesla just parks it right there. So you can play both sides with a debit spread straddle. Interesting idea. Max profit would be very limited. So that's one way to play it. Could be, it would limit your gain to 100% basically though, if you got in for that $1.25. So the difference between the strikes, $2.50. If you spent $1.25 to get into it, that would be half of the difference between the strikes. $1.25 times 2, $2.50. So that means the max profit here is $2.50 minus the $1.25 you spend. So 100%. If you spend $1.25, you can only make $1.25, 100% gain. And you'd have 2 days of risk. So if this popped tomorrow or tonight on earnings, tomorrow you would want to close it out probably, maybe for a little less than the full gain. Or if you were in the put spread, Got in for $1.25. Same thing. If we drop, max profit, difference between the strikes minus what you pay. So the less you pay here, the more potential profit you could make. So you could make over 100% if you spend closer to less than $1.25. That's a different way to play, a little higher probability probably. And yeah, Goose recently stopped by my place. And Goose, the crazy thing is, it's installed 2 new software versions since you were here, including one this morning. So it's just keeps getting better at driving. It's kind of crazy. And Ed drove Goose and I around, and I didn't really take over much at all. One person was road raging against us, and I took over just to get away from them because they're road raging against the computer. It was funny. I guess just being a total dill hole. Anyway, I've had 2 instances where people road raged against the self-driving. It just makes me laugh a little bit. So focused on the car that they I mean, it was just driving it just, yeah, the little car, like, so we got on the interstate, and the little car like slammed on its brakes in front of us, and Goose was like, I think you freaked him out. And I was like, the truck is just driving itself. I mean, and it goes and gets over in the fast lane, and this little car goes zipping up the slower lanes, comes across in front of a tractor trailer, gets over in the fast lane, and then slows down in front of us. And I was like, yeah, this dude's road raging, and it was ridiculous. Anyway, looked like a long-haired marijuana smoking individual to me, but I don't know. They were in I don't know if it's a Nissan Versa, or maybe it was a Toyota Yaris, or maybe a Honda Fit. I don't know. It was one of those little cars. It was just kind of funny too. So that's Tesla. The range, I guess we should put this on here. Market pricing in had moved down to 407, probably up to 455. We bust out of here. The average move up is 39%, which, holy guacamole, that would be right up here. So that would be the average move up if we move up 603, which is where a lot of options players are priced right now. Priced. And we can look at the GEX real quick. Let's type it in for Tesla. Kimberly thought it was funny. I'm always calling it Tesla. So GEX is not very strong. And yeah, they started picking up some players for February 2nd. Not many. There's not really big levels in here. Let's see. Yeah, despite all the big buying, there's not really much gamma exposure on Tesla. The biggest level is actually down here at 420. That may be saying we're going to see a drop, possibly. Interesting. I'm long like 5,000 shares of TSLA plus a bunch of puts on TSLA. It's been a juicy play. This thing hasn't really moved since back here in September. I've got a variety of puts I've been playing. This has my rocket ship pattern in place where we moved up right here, retraced to a 618, and the roadmap line is in place at the same place. If this pops out, likely to make an outsized move for TSLL. Could be up here as high as like 40, maybe even 50, if we actually played it out. Now, this is a leveraged instrument. Be careful on leverage. Significant risk of loss, and Tesla actually has to move. This would never go higher without Tesla itself moving higher. So if Tesla plummets, this is going to move down at 2x leverage. So be careful. Would I play long options on this? Absolutely not. I am selling puts. Is what I've been doing since September. Well, actually since June, I think. I've been selling puts since June, getting put stock, and selling upside calls against that stock. I have some 25s sold against part of my position for this week. And if it busts through, well, I'll just look to sell more puts up here and ride it on higher. I don't think we're just going to wake up tomorrow and be up here at 50. Probably not happening, but we'll see. We'll see. Yeah. The beta on this, and one reason why to not buy options on this is the beta is 3.32. Much better to sell puts and sell calls and make giant money right there. Now, I've had a position of 4 puts that I started back here at 19. I should say part of it's at 1950 and part of it's at 20. I've rolled those forward, including this week. Since then, just every week rolling it forward along the way, not ever cashing it out. What does that mean? It means buying back the one you sold last week and selling a new one. Jack and I have talked about this quite a bit, and this is on TSLL, not Tesla itself. A little different show today. Here's the ones I've got. So if I was going to roll those forward, we jump over here. We go quick roll expirations, roll it out a week. You would buy it back, and you would sell the new one. Now, I've done that with 4 contracts right there. 4 contracts uses roughly 79.50 in margin to have short puts, cash secured, rolling out here. I've brought in over $3,500 in profit booked since September just by keeping those contracts going. Never getting put shares, never buying shares, the price didn't move, but this is the premium harvest. So instead of it being $20 exposure here, I'm actually if I got put today, I'd have roughly a cost basis of 10 because of all the profit I've already booked. Freaking craziest thing. So even if we drop and I got put those shares, already got the profit. Already got profit going. Or lower cost basis going. And if you wonder about that, like you're like, well, I'm not sure I fully understand what you're doing. I actually have some shares in the K-Info account that I've been selling upside calls against right here. Boom. I rolled in and sold those calls for a mere 5 hours, booked out $20. 1950s. I'm sitting on 600 shares in this account. I take pot shots at selling calls against it. Looking for that to take on off. So that's Tesla. Spent quite a bit talking about there. Microsoft has some big call buyers, but we are at resistance here. If that takes a spill back down again, that's where we're heading. Earnings coming up today. Let's take a look at the gamma exposure markets. Yeah, we could probably spend all day going through these different options plays and how you could take advantage of each one of these. Microsoft doesn't really have much on the heat map. People expecting it to break out of the current funk, maybe go higher by April, but that's not today. Today, bigger level down at 445, so take us back to the lows. There was a lot of call buying on the sweeps. That's what I was talking about. I saw, kind of watch social media for people that post about big sweeps and stuff like that. I don't really have a Microsoft exposure play going right now. They do have all the Mag 7's got the new options going. This one expecting a move of roughly $25, $24 also. So the move here, $24 up, $24 down. It would be roughly 505 on the upside and roughly 55 on the downside. Something like that. Roughly what they're pricing in. Somewhere in that range. If it busts out of that range, that's the opportunity to make money on Microsoft. Meta, also reporting earnings today. Now this one, look at this. We've already hit support here. Already hit support here. Already done the bullish move. Closed above the roadmap line. This one might be ready to take off. Meta and I have had a love-hate relationship making money. I've been very reluctant to buy some METU because of that relationship. Pricing in $45 move here on Meta. Bit spicier. The price, of course, is higher, $6.75. So 45 up, 45 down, 45 up puts us there, 45 down. About right there. Oh, a little bit lower. That's the range that they're kind of pricing into Meta right now. So back to the 618 or breakout above this high. Since we've done higher lows and moved above the roadmap line, I think 1100 to 1300 is the path we're on. Could take a couple years to do that. But that indicates that even if we do a pullback, it's an opportunity to get some exposure for going on up. So that's what I got to say about that. Look at the futures overnight. ES back to the all-time high. Actually made a new all-time high last night. Couldn't stick a candle close up there though. So got a new all-time high. May retrace to the roadmap line here. Remember FOMC 2 p.m. Probably not going to do or say anything at 2 p.m. Powell speaking at 2:30 p.m. For channel members, I plan to go live about 1:55 p.m. for you. That's my plan right now. So that's what we got. No, I sold TSL puts. There's no buying. It's always selling options. Yeah, those are sold options right there. These are negative. So they're sold. And they're on the sell side. They're sold. That means the market can put me those shares. I've agreed to buy those shares at those prices. NASDAQ has not made a new high, although we did go on a tear. We did break out. This is I've been warning about this being like a beach ball held underwater for months. We have still not yet made a new high. Although we are on track to potentially close at the highest level the NASDAQ futures have ever closed on, if we can close up here today. So if we pop out on FOMC, the upside at 26.6 is what I've been talking about. Looking at the cash index, nice fat gap up and potential to cruise on up to that 26.6 area. Just been ping-ponging around up here, ready to tag it. Now, can we go ripping on out? That's the big question on everybody's mind. And what's really fascinating to me, when you look at the way this bounced around in here, this big pullback, this kind of grind right here. I was talking about this yesterday late on the members only stream. When you compare the .com price action right in here to the current NASDAQ price action, we're kind of doing the same thing. And if you pull this forward to match the prices, what we did .com bubble, 96 to 2001, we might be about to embark on a big breakout that takes us up to like 40,000. That'd be pretty wild. Pretty wild ride. Now, S&P over here, same kind of situation. We're banging around 7,000. We might spike up through. We might come back down. We might come back up. We might, volatility is what S&P looks like if we do the same kind of game. So we could have more to go on the upside on this ridiculous bubble. It is a bubble. Before reality sets in that AI is not producing the profits that everybody thought, at least not for now. Or maybe we all just lose our jobs to AI. I don't know. We'll see. This thing could go on an epic breakout while S&P chops around. Russell, on the other hand, tagged the high, moved down, sitting here consolidating, retrace down to this fib line. Could set it up for the next one up. The next one up is right up here around 3,100. So if you wanted to be ultra long with a leverage way to play Russell, UWM would be a way to play. CL with breaking through the roadmap line yesterday, cruising on up. Next resistance is up here around 66 with the downtrend of highs. If we get through that, oil is probably on a path to 100. It may take a while. Could take the rest of this year. This pullback has been a slow grind down, especially the end part here. But the 618 is hanging out right up here at 101. And if we break through that downtrend and confirm it, don't just spike up and reverse, probably on a path back up there. Could go quick, could be a slower grind, but that'll be the resistance. And if we get above that, we could be out at 150 oil on the next stop. Dollar devaluation is what's going on. Potentially buying in and pushing gold and silver to ridiculously high prices. So 52.70. This bubble in gold is going to keep going for now. Bitcoin coming back a little bit, but still below the uptrend of lows. Still a lower high. If this turns back down right here, we are probably coming right back down, lower low than that move right there. Probably. Same kind of story on Ethereum. And NKD. Just churning here. These lower highs have me concerned that we're about to take a spill on global liquidity. Dollar. Look at that. Dang. I can't even believe that right there. Should have played that. This probably rallied back up to somewhere around 97. And it'll probably take a couple weeks to do that, more than likely. This took, how long did this take right there? That took 24 days. So this will either go really fast, like be up there in like 8 days, or this may take like 60 days. With the way the market's going right now and all the bull crap going on internationally, Maybe this is going to be the fast one, and this only takes 8 days, and then we see the final move take place on dollar index. Dollar index pushing lower, pushes gold and silver and oil higher. That's the name of the game. Apple, you may be like, what about stocks? Yeah. Dollar and stocks are correlated when they're correlated, not when they're not. Apple here has earnings tomorrow. We can talk about that tomorrow, but this is kind of a bearish looking pattern for breaking down further. As long as we're under here, probably going down. Now, Apple can surprise and announce that they've figured out how to cure cancer and be to like 5,000. You know, just buy an iMac. You won't ever get cancer. Amazon set for 265. As soon as we break out here, we're ripping higher. That's the target, 95. Basically, based on the history of this company, 95% chance we're going on up here to 265. Google, just hovering. They got earnings coming up next week, like Amazon. And if they break out higher, they talk about how they figured out how to extract even more money out of your Gmail and YouTube. 385. Meta, we already talked about the range. Microsoft, we already talked about the range. And Nvidia has earnings way out here at the end of February. Sitting here under resistance at 195. If we get above that, 220. If we break down below the roadmap line, retest of 150 would be in order. Tesla, we already talked about pretty ad nauseum. Looks likely to hit the roadmap line, but if we break out, 39% higher would be the standard move, and that could put us up at 600. Netflix, still grinding the bottom of the box. Already reported earnings last week to that drop down to support. And we're trying to prove that was the bottom. So we have the gap down to fill. Haven't been able to do that yet. Roadmap line all the way up here at 100. And it just doesn't look very good. If we actually break down below the lows, probably coming on down to the 60s down here on Netflix. So I go put gainers, things moving up $2 more than pre-market, and things moving down $2 more than in the pre-market. Put it on the decliners list down here. There's quite a few of these on there. I talked a lot about Tesla, so let's go ahead and jump into the setups that have the daily pattern in place. Then we can talk about kind of the expectation for the day. So this has a high here, a low here, activation here, but this is a downtrend. So I would not be keen on taking this with that downtrend in place. This is the Apollo algorithm on the daily chart, 1782, 2.6. But you notice it did not fire off on the Apollo algorithm here because this is a downtrend and this swing down has taken way longer. So even though this little baby here hasn't taken that long, it didn't activate the upside because of this bigger downtrend going. Not always the case, but I would be leery on that one. Now, it doesn't take a new high to get to the target at 57.90, but not keen on that one. A little flatter here. This one's been in it from back here because it's just been sideways chopping. Target is up there at 19. Coming up again. Yeah, we haven't been able to hit it yet, but that one might work out. But historically, not, no statistical significance here. Need a population of 30 trades to be statistically significant on these two numbers. So we don't have that. And the average across 100,000 trades or so is 75 and 1.2. So 75% chance we'll hit 1910. BIB. Look at this one. Oh, this is a way nicer potential trade here. Move up, retrace, happen in 3 waves. Here's the high. Here's the low. Here's the close above the 618. Really like this. 36.98 target. I'd probably go a little conservative, 36.50 maybe. And 1973, 1.6. Not statistically significant, but hanging out right in the average. So this is a nice average move. This one didn't actually hit the 618 on the actual swing. The Python algorithm picked up this little high right there. and that little close right there. So I'd wait for this to get more upside, back above 124, and go for 132. Duke Energy. Little baby swing on Fang. Diamondback Energy. I say baby swing, but it's fair enough. Here's the entry. 167 target. Stop is always $1 below the low, no matter the pricing. FDN. First Trust. So bigger downswing, but due to the depth of this dip, here's the high, here's the low, there's the close above, and 277.86 would be the target right there. You know, only 18 trades here, but these numbers are running pretty spicy here. 83 and 3.8. MEI. Done a couple of these bounces. Here's the entry, $9 target. Stop is $1 below the low, so $5.50. Be careful on low price stuff. That's a big stop percentage wise compared to only like $1 higher, not even $1 higher on the target. NOG, and that's a downtrend, but 26.22 would be the target. I probably wouldn't trade that because it's under the roadmap line, but PAM. Here's the high, here's the low. Entry, 96.55 target, 18.77, 1.1. Just a standard play. This one's been in it from back here. 14.30 targets. Did a secondary bounce. We see that a lot where they trigger a target, retrace the roadmap line, and then pop up to the target. So Soup V, not too shabby right there. And XT, last but not least on the setups for today. There's the entry, 77.40 target. Just another average, several average tickers there today. Those are all ones with the pattern set up for an entry today. Diving in, let's take a look at the gamma exposure. See if we can read the tea leaves of the market, predict kind of where we might end up today, even though things could get pretty spicy with the FOMC. So yesterday, here was the range that Gamma was telling us in the morning, and that's where I thought the options might kind of pin. We ended up 55 cents above the pin. So let's move this over for today and grab the gamma exposure levels and see where the tea leaves might lead us to. Grab it, pull it over. So we've got 704 on the top end and probably down to, we're going to say 692 on the downside. So 692. $704 on the upside. We definitely have some upward bias going. Looking like we might get a positive reaction out of FOMC. As far as levels go, for SPY, probably screwed the most number of people, sitting at 699, just under 700. So that's where I'm going to put the level today. I think we might come up there. Could hang out down here, but there's a lot of put players at 695. Yeah, we could just hang out at 697, I guess. If we sat right there at 698, we'd probably screw more call players and put players. So maybe it's 698. Maybe I should revise that, 698. Strike that, reverse it, 698. Would not surprise me to pin right there today on SPY. And that's where we touched this morning, so may drift up in there and hang out there for today. QQQ, arguably more important for my beer money trade. This is the one that I play with NASDAQ. Let's see. QQQ. So what I'm doing is clicking on the levels button on bullflow.io. Links in the description if you want to grab a. I do pay for this information. A lot more call players here on. Ooh, wow. Big tech kind of playing calls a lot here. It appears the big expiration they're playing is Friday. So not many players playing today in front of FOMC and big tech earnings, but a lot of people playing for Friday. So right now, this looks like we may be capped in here at 634. A very small put level there. Gets below most of the big call levels. So 634 looks like the possible place we might hang out into the close, which is just right below where we are now. Now you can push that on higher. I didn't quite get that close yesterday on the pin for QQQ. As far as the gamma heat map goes, there are less players on the Qs, but the bubble has gotten really big here all the way out to Friday. So we have levels all the way up to 642. We're going to go with 641 though. And then down to 631. So 631. I'm going to say that's the bottom today. It's right where we closed yesterday. And then said 641 on the upside. So we may bust out of this, but oh, that's right above the fib line. Yeah. That's what it looks like today. So we, if things get extra spicy, we may see this rally up here, but it would make most sense to hang out here at the close. So if we do go ripping up here and you play the put later on in the day, be careful. We may come back down here to close it out for big tech earnings. That's what we got cooking. Hopefully that helps everybody right now. And be careful out there. I'll be live with Market Masters here at about 11:30 with Jack. We'll talk about Tesla and some other things. We both have large positions in Tesla. And like I said, for channel members, I'll be live at 1:55 p.m. Eastern, right before FOMC. We'll hang out and watch FOMC reaction. And otherwise, I'll be live tomorrow morning. Same bat time, same bat channel. We'll look at what happened with Meta, Microsoft, Tesla, talk about Apple, and have a good day. Be safe out there. Don't lose money. See you tomorrow. Bye.